Hey, good afternoon, everyone, and thank you for joining our weekly meeting here. We still got some people joining, but we'll get it kicked off anyway. So let's get started. What we're going to cover today, we'll go through a market update. I'm going to go through and make sure you guys know how to set all those alerts for the earnings. And then, Shawn's going to go through, how the earnings are going so far. And I think he's going to show, one of the upcoming butterflies or such. So I don't think we're going to go the normal hour and a half. This may end up being, more closer to an hour this week. So what we want to go through first, I appreciate everyone, going through and adding in feedback. Like I said, our lead programmer was out. He just got back Monday and he's been inundated. So we haven't made too many updates on this, but I think, in a week, next week or so, we'll be able to, tackle this more, but he's just been, flooded with work. He's gone for 3 weeks. So, as always, just please add in the feedback, and we'll address it as soon as we have the time. So, as far as the market update, you can see we're even higher on state ones here. Very high historically. We can go into the market pulse and see, the peaks going back a long time for state ones. I like the percentage better. Sorry, these are a little busy to start off with. So we're up near record highs on, that state one. Very very overbought market right now. Kind of just fighting along here. So we'll just have to monitor that. But, this indicator alone tells us that, we're very overbought. We looked at this last week. We had the bullish bears, starting to converge a little bit and then they pop back out. So, no one knows exactly when these will turn, but, we're pretty confident they will be turning in, I would say, the near future, but I'm not going to say, what day or I don't have that crystal ball. So we'll go through and analyze, the different indexes like we normally do. We'll start with Russell. That one, still off in the stratosphere. Seems like it's still leading the market. Like I said.
John,
Yep.
can I just throw in a question real quick?
Yeah, shoot.
Do you think about hedging at all? Since if we think the market's going to turn relatively soon, and that could be 3 weeks, it could be 8, but it's going to turn. Do you have thoughts about hedging? Maybe buying the SPY or something?
Yeah, I mean, I said this probably like last month, like when we get up to this levels, if you're not hedging, you should at least think about it. Obviously it hasn't, we haven't had any major like corrections, in that month, but, I think if you go out, if you're looking past, I would say the next week would be the most risk right now, with two sides fighting, one side saying something, the other saying the other. Politically, I think the next week is probably the most risk to the markets, in my opinion. So, if nothing happens when, so there's nothing, if you're concerned, there's nothing wrong with, especially long term. Like I help my parents and family manage their stuff, and I, my philosophy is, if there's a ton of risk out there, there's nothing wrong with, selling holdings, especially in IRAs and things like that. You can buy it back next week, right? If you think there's a drastic amount of risk within the next week, then there's nothing wrong with, selling, holdings, and you can buy them back next week. They probably won't go up 40% or anything, so I don't think so. That's one way you can do it for, like long term. And the other way is, obviously buying, kind of protection via puts, or, some people do like VIX calls, longer out, so you're not getting totally killed on time decay. So there's multiple ways to do that. And, it's just when we're at super record, highs and making new highs. And, if there's a lot of risk, I'd just say, now it would be prudent, where times like this, where you want to actually put on, types of hedges and how you want to execute that. I think you don't really have like a formula where, we don't advise people, but I can tell you what I would do. And
Okay.
Can I make a comment too on that?
Sure.
I think somebody else is jumping in, so if there's, I'll
No,
go
that
second.
was background noise. Go ahead.
Oh, okay. Specifically to Lee, I think it depends upon what you're trying to hedge, and everybody's portfolios are different. So if you're trying to hedge your entire portfolio, that's one thing. You can do that with an index. If you want to hedge specific stocks, you can do that with buying puts or whatever. But you have to, I think about what you're trying to hedge. Do you have a few stocks that have run up a lot that you're trying to hedge, or is your whole portfolio up, grinding higher, and you're thinking it's at the top and you want to hedge that for a little bit? So it's like, I feel for Josh, because there's no one answer to that, because we don't know what is in each other's portfolios. So I think you should look at that and see where you think within your portfolio where the risk points are, and then look at the different strategies that you can apply to that might make sense. And maybe even throw some, help me out for the group, and see what other people in the group say, to an individual idea or something on one of the other collaboration tabs or something. But that's my thought. It's not I don't think Josh or Shawn can answer that effectively without knowing what it is you need to hedge within, or what we need to hedge within our individual portfolios. And that's what we need to look at. Where do you think the biggest risk is?
Dave, I think those are excellent thoughts. I'm shallow in my thinking. I've got about 10 trades sitting out there, but it adds up, and I don't want to lose those 10 trades where I've got invested.
Yeah.
So, excellent. Thank you, Dave.
Yeah, Dave, that's a great point. Obviously everyone has different holdings, and some people are just trading. Like if you think about what like Sadir did during the elections, he's just worried. I'm not sure what's going to go on. There's going to be volatility leading up and up through the election. So there's nothing wrong with just kind of holding off for a week, just to see how things kind of play out. When there's always going to be more trades. Obviously, earnings season is really starting to pick up. But if you're not sure market direction, or you're just at this point you say, wow, this thing's just going to run. I'm not sure when the top is. I just don't want to be caught. Or it just kind of depends on what you're holding, and what you see as the risks. I just see a lot of risk in the next week, overall. Once we get through, depending on what happens, it's just your portfolio needs to be drastically changed based off of which way things are going to go.
And I just have, this is Shawn, and I just have as a side note, I think a lot of people on the call were in attendance when Ashok, had started putting out that iHedge information within the platform, using, those different sector spiders or those sector ETFs to buy puts on to possibly protect you for a discounted rate versus what it would be to buy puts on the individual stocks, depending on what stocks you actually have. So I haven't messed around with that particular part of the platform enough to give an educated demo right now. But if there are people that are interested in doing that, I'll take some time to look at it and see if we can construct some plans based on those individual holdings. But, I think Ashok is very brilliant in some of the things that he talks about regarding the markets. And that would be one that I would use to my benefit, that I hedge feature, and possibly using, some of those indices as puts if you wanted to protect yourself depending on that particular holding. So, and then as a side note too, Joe put in a couple things on the chat. Josh, I don't know if you want to look at those, but was asking what percentage of a sell-off can we anticipate if we get a correction? And then there's another one after that as well.
Yeah, I don't try and guess, how things move. The typicals are 5 to 10, that's kind of like the pullbacks, goes into state 2, hits the goes down, hits the target, and bounces back up. I don't know exactly. I'm not going to pretend like I have, the crystal ball here. I'm just saying that it seems like we're very oversold based off a lot of indicators, and that just tells me there's risk, to the downside, and pretty much most of our trades that we put out there are bullish. Outside of those neutral type things like the iron butterflies and things. So that's basically what I wanted to convey as far as market wise. So you can ride it until it turns over, but the tops are always a lot harder, and the movements down are a lot faster than trying to find bottoms in the market. So this is.
Can I add something?
Yep.
Yeah. So obviously we're near a top. So and hedging a portfolio, as others have pointed out just now, is there's dozens of different strategies. Whether someone's saying vertical spreads, you can buy VIX calls, that sort of thing. But the first thing that people should think about on hedging is don't let profits turn into losses. If you're sitting on a profit, an unrealized profit, right? Let's for an easy example, let's say you happen to own long stock that is, maybe you were smart enough to get into Tesla before this latest run, right? Either take the profit or set a stop such that if there's a downturn, you're still getting out at a profit. So you don't let a profit turn into a loss. And then there's dozens of different, then it gets into the complexity of trying to hedge an entire portfolio, which there's many different things. But if don't let those profits you're sitting on turn into losses. That's the first thing you got to hedge.
Yeah, that's a great. Yeah, and I was gonna say that's a great point. And as silly as it sounds, right? And many people have said it. I even told someone last night. I said, you're never going to lose money taking a profit, right? So as simple as that statement is, maybe as silly as that statement is, I think it's really valid right now. Like I was talking to Josh this morning as well, and I have a handful of positions, just long stocks that are up a tremendous amount of money based on these big moves that we've seen just recently. So, it's almost silly to go into the risk and not take some of the profit off the table. And you can always look back and, you're always going to think about the ones maybe that you missed, but that's neither here nor there. Like it said, take the profit. And then if you want to get back in the position later after the risk is off a little bit, then so be it, right? You're not going to miss as much of a big move, in my opinion.
Yeah, and I guess the only other way I think about this is, if you invested, X amount and it's worth, it's up 50% or something, there's nothing wrong with just taking out your initial money and then now you're playing with house profits. So that's just another way you can look at it, I think. Okay. So, Russell, obviously, like we said, up in the stratosphere. We'll go through SPX. That one, it popped above T3, kind of and then, tried to get below it, and now that turned into support. So that's up into, that's up above, just like IWM or Russell. So this one obviously is kind of off our charts. So I had to go into the next one, the the only one that's still around T3. So this one has been lagging the other two indices. So the Russell's been leading lately, and this is the last major indice. Really, I don't look at Dow at all, just because it's only 30 stocks. So this would be your last one above that, looking at the target 3 here, since the other one. So you can still look at SPX as, that target 3 as support. And this one, it's kind of doing the same thing SPX does. So this is the one, I would key on right now. Normally we don't, but since this one's still on the page here, this is what I would look at as far as, this resistance level. And I don't think we're above that now. So this would be the one that I'd look for. The other one I just kind of want to show, the SPX, it's kind of looking at SMAs, and it just seems like, this 21 has turned into like a pretty strong support here. So that's something else that, you could watch, if it gets down near that 21, see if it breaks below or not. That just seems to be, since the election, what the support is for this run up. So you can watch that also. So in general, just extremely overbought, and who knows when this thing turns over. But I just before I'd say I'd be careful. The next week I'd say I'd be extremely careful on those bets. So that's my take. Does anyone else have differing or
I wanted to ask a question on that, if you wouldn't mind. Can you put the NASDAQ back up, or the QQQs, either one actually?
Mm-hmm.
And I think all your warnings are justified especially if you're trading the index. My question though is, for example, and I asked for the NASDAQ because that's a lot what I trade. I trade stocks within the NASDAQ quite a bit. I think I mentioned before, chips, some platform stocks, some of those kind of stocks. And the thing is, most of those are not influenced. Most of the individual holdings are not, say, affected by the index or the Qs necessarily, because those two products, if you call them, are dominated by like the FANG type stocks, big caps, mega tech cap stocks.
Mm-hmm.
And those are performing differently than a lot of the individual stocks within, for example, technology. So all of technology isn't like the NDX or the Qs. It's actually kind of quite different. So especially if you're thinking about a hedge, and I'll bring up a personal problem, maybe it'll help other people think about that I'm having here. I've had, like Shawn mentioned, a serious run up in the green energy stocks and weed stocks that I was speculating in because of the election kind of results, and where the platform that Biden has put out there, which, by the way, I think he's going to reiterate or expound upon tomorrow. So that might be something to look for or listen to. So those stocks are, if you will, like bubble stocks. It's like, okay, their valuations are really stretched, but they're in a long-term secular uptrend that's going to extend for, in my opinion, probably multiple years to decades, especially the energy stocks. There's energy that's old energy like oil and gas, and there's new energy that's like EVs and hydrogen and electrification kind of stocks. And they're all in the energy sector, but they're way different in how they behave. So you know, one I'm diverging here, but a question to Shawn is, well, if you're looking at how to hedge, I'm trying to figure out how to hedge those, or not hedge them necessarily, but I don't want to get out, or if I put in a stops in a volatile group, you're going to get stopped out a lot, and you're going to wish you didn't. So that's the problem that I have with, you know, putting stops on. Where do you pick a stock on a really volatile, you know, small group or a group of stocks like energy stocks, new energy stocks specifically? It's not that easy to do, but I'm having pretty good success with, you know, some of my trials and errors. But I haven't figured out a system to, I won't say hedge with, but protect, but not get out, because there is some, I think, serious growth still ahead in some of the areas that have turned positive with individual, you know, themes in that. You know, I got away from my point a little bit, but that's my problem is I'm trying to protect against a bubble, but the long-term trend is in my favor. So I don't want to just get out or try to time it necessarily.
Yeah. Well, I think that it's, how do you look at it? What's your goal for that? Is that a long-term investment or is that a trade?
Yes.
So that's what you have to define. You know, if it's a, you know, long-term investment, then, you know, you're actually probably looking to accumulate more shares, right, on dips and things like that.
Do all of that, yes, yes. So there's long-term, you know, like you said, long-term investment strategies that you have, and there's short-term enhancements that you sometimes put on, or hedges that you put on. So, yeah, it's a little bit of art to trading, and I'm not complaining at all. It's like doing incredibly well for the first, you know, couple of weeks of a year, but you know, there's the vaccine and the COVID-19 stuff is still out there. So,
Yeah, Shawn, did you have?
No, I was trying to look up some other stuff on there, but I agree with Dave. You know, I mean, it is hard on some of these more volatile stocks. Like, I mean, some of those that can move big percentages in a day. To place a stop on there, you could get stopped out, and it could be back positive in the matter of a day's trading. You know, I was trying to look up some of those ETFs, like the autonomous EV ETFs that they have out there. There's only like 2 that I found while you guys were talking, but the open interest and the volume is kind of low on some of the put options for those ETFs. I don't know if they would be a good hedge or not, but that's just an option of you know, something to look at, possibly buying some puts on those ETFs to see. I just, you know, with a limited amount of research data right now in front of me, I can't tell you exactly what the, you know, lack of a better word, the perfect hedge would be, but maybe it would help you a little bit, you know. But no, I mean, some of the similar ones like the F-Cell and some of those other ones, those EVs that are just, you know, shot up pretty much in a big way. And like you said, you know, the next week, a bunch of risk coming on to, depending on what, you know, the president-elect's going to say. And then that could be a huge impact on these particular markets in particular, just because of how much they have moved. So I'd have to look a little bit further, but that's what I might do, is look at some of those puts just to see, and try to see if I could figure out what a good hedge might be.
yeah, the problem is in the space that we're talking about there, F-Cell, Plug, I could rattle off MPH, a whole bunch of them, and the problem is it's an area that a lot of institutional ESG institutional investors want to get into, but there's not there's not a big number of stocks to get into. It's been a relatively small space, so that's why they're stretched. And you can't listen to the news, because I follow the news on all these, and in one day you'll have a guy come and say, well, this has gone way up too much, it's a bubble, and then 2 weeks later, every analyst out there is raising their price targets by 300% because, well, they see it catching on now or something, you know. So filter out the news and you know, kind of identify the trend. That's what I'm trying to do, is identify the long-term trends with my investments, and then the medium-term trends I trade with options. Anyway. Sorry, I kind of rambled on.
No, it's good. I think it's a valid discussion. Obviously, there's multiple people concerned about that right now. So did anyone else have comments?
Dan here. Hi. I've been listening to some financial websites and stuff. And one of the things right now that I keep hearing is that we're in a melt up because of the dollar. The dollar is getting decimated. Bonds are not performing well. So I think there's a flight to stocks and options. However, there's another investment financial company that they did some really nice tracking of markets similar to what we have today, where they're toppy and where they finally rolled over, and they looked at how far they had fallen.
Mhm.
And in just about every case, if you looked at the big crashes, if right after the bottom of the crash, it's always good things happen. It seems, it crawls back out. Of course, we want to avoid, that crash. But I think right now the tendency for the market to be up is because of the dollar, and that's the impetus. But I think the thing that is important to look at is looking for signals for that turnaround. You have to look at your charts and look at your indicators, whether you're using some kind of a moving average or an RSI, momentum indicators, whatever, and look for those signals to see a change in the market.
Mhm.
And like what you're doing with the overall market, with the with the SPY and NASDAQ and everything, that's one thing. But even with individuals, within individual stocks, ETFs, you can chart those and look for a signal based on whatever it is that you're heavily invested in, and see if you see a signal for, a rollover. Some people look at the Bollinger Bands, Keltner channels, and see what side of the channel they're on. And breaking through different moving averages, things like that.
Mhm.
So I think, maybe it would be a good idea. I don't know if anybody's interested, but just to go through some, charting analytics, what people think is good indicators to use on their charts. Maybe that could be a sideline for another group session or something. But anyway, that's just my 2 cents.
Okay, I appreciate it. I haven't been following the dollar too much. I do, follow TLT. That's 20+ year Treasury Bond ETF. So, I try and follow this. They usually, depending on the market environment, like a typical market environment, these will kind of move. This is the flight to safety. Would be these long-term bonds generally. In a general, a normal market. So, so you can look at this also. And, Dave, if you're looking at specific sectors too, like subsectors, you can pull up like the semiconductor ETF and, look at how that's modeling too. If you want to look, kind of like the same thing we did with those big, the indices, you can do it, on an individual level for the stock, or you can do it for, the subsectors too. You can do that same kind of analysis. I think most of you guys are pretty comfortable doing that yourself at this point. So, yeah, I think you can, depending on what you're in, you can always just pull up that subsector and focus on that. I think it's always good to know, general market direction too, because usually a lot of them fall, then they mostly all fall, together. So, okay, so I think we're good for that. I'm running out of time here. So one thing I did want to show, so under the earnings, each day at 9:30, and I don't believe you're getting the emails yet, but you will, under this earnings pre-alerts tab, will come out the trades for today. So you can see, the calendar's still showing 112 up here, but these are the 113 trades. And, these will populate each morning at 9:30. And I just emphasize, you want to, especially any kind of pre-runners, you want to verify what's confirmed and what's not. And if you see a name in there you really like, you might, and it's estimated, I would just go check other sources to see if it's confirmed there. So what I wanted to make sure everyone had, in order to get these alerts, when you go into your plan and you select the Q4 2020, and if you don't have that under, and I'm just to slow down a little, under the plan, earnings plan, if you don't have that Q4 2020, then just, let me know, because it's a matter of adding you to the group. I think everyone here is on that group, so you should have it. So once you load up that plan, you just click this in the top right, the notify alert, and then you pick which strategies you want as far as to be alerted to. So anything over here, so if I take out the bullish pre-runner, and then I go back into the earnings alert, you'll see they all disappeared. So it updates it instantaneously there. So I'll go in and do the notify alert for all of them, and then you can go in and it'll obviously populate in the alerts there. So Volrise, everything will populate in here. So it gives you, it helps a lot with the tracker, and if it's estimated, we can't really do anything about that, based off of the data that we have. So, I would definitely just focus on, the confirmed ones. And the other, inside the plan, the other thing that we did fix, because I know a lot of people use the plan. So this search functionality is now corrected. So all you do is put in, JP Morgan, Google. So that search functionality is now correctly fixed for everyone. Okay, so that was the basics I wanted to cover for Shawn. Are you ready?
I have a quick question on the pre-alerts.
Yep.
Is there, these are entry alerts.
Mm-hmm.
Are there any plans for the closing alerts?
Well, we have that issue. We have them in daily alerts too.
Yeah.
So they should be duplicated in the daily alerts. And that closing functionality is still being worked on. It's not, the closing trades are, they weren't populating properly. So we have that capability. It's just not, it's not functional right now. So
okay.
I would definitely, especially for, long, the pre-runners, you can put in that profit target, as soon as you enter any of those types, obviously you can do the same thing with, strangles, butterflies, I think those are more manual trades. So yeah, I would just stick with that. We'll work out the kinks on the closing though. Okay. Any other questions for Shawn gets going? Okay, Shawn, you ready?
Yeah, I'm here. Yep. Yeah, share my screen, and then I just wanted to go over a couple of the earnings stuff that we have coming up, whether it be the bullish pre-runners or the vol crush trades that are going to start today or tomorrow. We have some earnings coming out tomorrow morning, and then just like Sudhir mentioned, I mean, some of those closing trades, we're working on trying to get those alerts set up to where they do come over properly, because obviously with some of your bullish pre-runners, if you don't hit your 25% profit, or you don't have a calendar update to where when those earnings dates are coming out, I've missed a couple within the virtual portfolio because the earnings date has happened and I forgot to get out, or I didn't see that I needed to get out of the trade. It was in the virtual portfolio, so it wasn't as big of a deal, but obviously if it's a live trade, and it does come throughout earnings and you miss it, and then it goes down or goes up in the opposite direction that you want it to do, it could be a bigger problem or a bigger issue than what had been expected at first. So we're working on that to get that corrected. So we'll see if we can get those exiting alerts to come out. So excuse me. Yeah, Josh had showed the pre-alerts. So just to look at those earnings pre-alerts real quick, I did want to let you know, especially on these butterflies, so your vol crush trade. So we have another one that is not here, which is Delta for tomorrow morning, Delta and this TSM. So just note that this data, so when you're looking at, the strike prices here, these strike prices are pulled at 9:30 or 9:35 in the morning. So this morning, the strikes prices were pulled with the current price or the opening price of the stock. So TSM is actually opened up lower today, and it's around the 120, 120 range. So, do not use these strikes as the golden rule. The stock can move dramatically intraday, and if it does, you want to get in, prior to the close or as close to the earnings announcement as you can. So just be careful that these strikes might be a little bit different because they are pulled first thing in the morning. So, that kind of goes back to what we've discussed, a little bit before was I like to go into Tradier or go into TOS and kind of have my trade set up for me. And then when my trade's already set up throughout the day, I can just make those quick adjustments, as I need to. So, that being said, if I'm looking at, that vol crush trade, I just want to show you, if I'm going to add the position, let me just show you that TSM trade, which would be for today. I wrote it down. So TSM, again, has earnings, I believe, tomorrow morning before the open. So we'd want to get into that trade prior to the close today. Let's see if that's going to let me do it. So the current price was right around 120.50, 121. And then again, we're looking at today being Thursday, or today's Wednesday, excuse me. So earnings is coming out tomorrow morning. So we'd be looking at doing the options potentially for next week's expiration, the 22nd, just to give us a little bit of more time on the trade if we want to do so. Obviously you could use this Fridays if you wanted to and be a little more aggressive. I mean, in theory, the real design behind the trade is to get in tonight, have the earnings come out tomorrow, and then you're out prior to the close for tomorrow. So you're in the trade pretty much, less than a 24-hour period. We've seen, sometimes it helps us, sometimes it doesn't really make a big difference if we stick in it with a little bit longer. But again, using that next week's expiration seems to give us a little more cushion. Risk-wise, obviously, it's also, if it's giving us cushion on the risk side, it's going to take away some of that profit potential as well. So just be prepared for that. But if we look at some of these strikes that we're selling, just to show you, I'm talking about a 120. You can see here it's showing my expected move as those current prices are, roughly around 850 or 830 or so. My expected move on the current prices are around 765, but an 8 seems pretty fair. So I would do a 128 call and then a 112 put. And we can basically see the information down below. Pretty much going to collect about 549, and I'm risking 251 for that TSM trade, which would be again valid for tomorrow morning, for earnings tomorrow morning. So that's about the current prices of what I received when I just did in another system as well. I was collecting about a $540 credit, and I was risking. Actually, I did 8 as well. I'm sorry. So yeah, a $540 credit, and I had 8 wide. So in theory, you're talking about 260 for a credit of risk of 260 for a credit of 540. So I know we've done this plenty of times, over the course of these past months. Does anybody have any questions regarding kind of the setup and the design of the trades and things like that? Okay, cool. So I mean, this one's pretty decent. The risk is fairly low, all things considered. We're talking about, roughly $260 worth of risk. Delta is another one that has earnings coming out tomorrow morning. Now, Delta is a little bit of a different animal, right? We're talking about COVID with the airline industry and the big impact that they've had there. So, there might be a little more risky doing a trade like that, or might not be as much risk because people kind of foresee what's happening in that market. But you could look at it a couple of different ways. They might have a good guidance coming out for the next 6 to 12 months, so that could affect their earnings as well. So let's see, I'll set that one up. I have that one out also already. So Delta was at about roughly around $40 when I just looked at it a little bit ago. You can see here the close was around 40, so it's pretty much about the same price. But if we're looking at the next week's expiration again, which is typically what I'm going to do, and I'm going to do a 40. The expected move was roughly 276, so I did a $3 spread. So I'm looking at 43, and then I'll look at the 37. So we can see roughly, just shy of that 2-to-1 like we talked about. But I think for people that are trying to figure out these trades or maybe wanted to put these in these virtual portfolios, this is a great trade because your risk is pretty limited. Profit potential is somewhat limited as well, but obviously low risk typically means a lower profit also. But just wanted to show you guys a couple of these setups on that trades. So both of those, TSM and the Delta, I think for that vol crush seemed like they were pretty good results based on the back test that we've done. This is just my personal tracker here. Somebody got something to say? Sorry.
Hey, Shawn.
Yeah.
A question. When you're selecting the strike prices, are you you're taking the current, the latest at the money strike, and to get the width, you're adding the price of the call and the put to get your spread?
Yes, sir. Exactly. And Joe just put that question through on the chat a second ago. That's exactly right. So, this is, I believe this should be the close for yesterday. But if I show you, this is just the toss system right here. You're exactly right. Delta's at $40. I could look at I've already did it down here just because I set it in there sometimes. But yeah, for next week's expiration, $40, I'm looking at the $40 put, which is here around $1.25. And the $40 call, which just, let's say, is $1.50. So $2.75. So then I'm saying the expected move is roughly $3. So you just take the value of the at the money call, at the money put, and that should be your expected move. Obviously, my credit that I'm receiving isn't going to meet that expected move just based on the fact that I'm using that expected move as my risk. But if you wanted to try to adjust a little bit more, you could, changing the trade to a different type of trade and maybe, selling a 41 call and then selling the 40 put and adjusting it that way. You can do that. But again, I've tested it as it's structured here, but you can definitely test it that way as well using the Delphian platform.
Okay. So that's more like a broken wing butterfly you're turning it into?
Right. Yeah. Or even, yeah, that's correct. Yeah. And I don't even know if it'd be a broken wing. I think it would just be like your standard butterfly maybe, or maybe like your iron condor. Somebody can chime in if they know the exact terminology of the difference between the two. But yeah, exactly. You would, because right here we're sitting at 40.24 on Delta. So in theory, we could sell the 41 call, sell the 40 put. Then we have that difference between there where neither one of those options are currently in the money. And it's just going to adjust, it's going to adjust obviously my credit a little bit. And we could probably keep the risk the same, right? I can adjust it here. Let's see. I'm on a smaller computer, so my screen's a little bit smaller, but let's say if I did a 41 call, I have to change this to a 44 put. So we can see now I have $3 risk on the put side. I have $3 risk on the call side. And then I have the gap between my 41 call and my 40 put, right? And I'm collecting $1.65. So we can see my risk there. My credit's a little bit less, maybe 30 cents or so. But my risk is the same, but within 40 to 41, if the stock basically trades within that range at expiration, all of the options should expire worthless and I'll keep my entire credit. So, there's a benefit to one and a benefit to the other, right? It just depends on if you're willing to take less of a credit, then you could definitely do it that way. And I think David spoke to that before, or where he might be a little more biased on one side versus the other. So he could kind of set it up a little bit differently.
Yeah. Can you show the difference in those two trades on the Analyze tab?
That's a good question. You mean down here below where I have it?
Yeah.
Yeah, I can definitely do that. So I just go in, I do a sell, iron condor. Let's see if let me kind of move this stuff around. So we'll do a 4. So I'm doing the January 2nd. So I'll do a 40, 40, 43, and then 37. And you can see the 30 cents there. And then sometimes I'll do the same, you know, I'll do a quick adjustment to where I say, okay, well, what if I wanted to do this Fridays? What would happen if I changed my expirations to the 15th?
Yeah.
Okay, well, now I get, you know, a smaller credit, right? Oh, that's, you know, so. And that's fair, right? Because you shorter time frame, less, you know, volatility potential in the options, shorter option time frame, therefore your credit's going to be a little bit less as well.
Yeah. Yeah.
So yeah, I'll do that. And this makes it easy, I think, to compare them if you wanted to compare them really quickly. And like I said, I like to have them set up either here or in that Delphian platform to where I can just have it set up before 3 o'clock Eastern time. So then I know I can go in and make my adjustments if I need to real quick. But trying to do all this information, you know, at the last minute definitely can lead to some trading errors when you're talking about, you know, because you're used to buying calls. So you're used to paying a debit, but now you're coming in here and you're trying to do this trade as a credit. So now you're selling it. And it's just a lot to think about sometimes at the last minute. So, you know, if you can have them planned out ahead of time and set up, then that's even better. Sometimes I even write them down on just a, you know, a pen and paper, a pad. So I can know exactly what I have to do. Because again, I've done it before where I've come in here, did this trade, and, you know, somehow I said buy. So I actually bought it versus selling it, you know, and you're like, oh, okay. Exactly the opposite of what I wanted to do, but you know, it happens when you're kind of doing multiple things at the same time. So,
Anything else?
questions, comments, anyone? Does that answer your question?
Yeah. Yep. Thank you.
Cool. Yeah, and they take some time to get used to it. We've talked about it. I mean, it's for, you know, this is probably one of the more complex types trades, right? We're talking about four totally different options. You know, you do have other trades which are like ratio spreads where you buy a call and maybe sell 2 calls against it or sell 3 calls or whatever you want to do. And those are a little complex as well because your risk profile on those are substantially different than this. This is great because your risk is defined. So as long as you set it up properly, the risk going in is what it should be no matter what. So it makes it a little bit easier, but you know, it is still a complex trade, you know, when you're first doing them. And that's why we have that virtual portfolio, is to go in there, put those in there, and it makes it a lot easier when you can use that as a learning tool to trade it. So
Do you look,
other than that, go ahead.
do you look at the bid-ask spread before you put the trade on? If it's too much, you know, you're paying too much for the marketer, you know, based on the price of the underlying.
Yeah, definitely. And I try to keep it at that 2-to-1. You know, sometimes I go a little bit less than that 2-to-1 risk to reward or reward to risk. If it seems like the spread is, you know, and I'm always using the mid price on all these, and even in toss, it's pulling up the mid price for me. But yeah, if you know, for that TSM, let's see that TSM. You know, if I was trading this TSM, that Taiwan Semiconductor, I had this one set up earlier too. So yeah, if I'm doing this as a, you know, 8-point risk, so $800 risk on each side, and then my spread, you know, the mid price is coming up to be like $750, so I'm going to $750 credit for, you know, $8 worth of risk, so basically 50 cents worth of risk. Then I'll just go into my option table either here or in Delphian and say, you know, is one of these legs just not trading, or is the bid-ask spread on this leg really out of whack? Something is obviously making this trade not appropriate, right? And if that's the case, then I'm either going to try to use maybe a different strike to see if I can get a good idea of what my bid-ask spread should be, or just not do the trade at all, because maybe there's just something that strike. Sometimes strikes, you know, in your lesser traded stocks, that strike of that option might not trade for a couple of days for whatever reason, and the other strikes are. So you could get a bad price on that particular strike. And if you do, you'll notice it in here and you're like, wow, I'm getting an awesome credit. Let me do this thing. And then you put it in to collect 750 and the market just, you know, never comes back. And they're like, who is this sucker trying to do this trade? We're never going to do this thing, you know? Or if it's too low, you know, on the same side, if you're like, wow, I'm not getting the credit at all, it's so weird, then just look at all 4 legs and just try to verify, you know, where is that difference coming from? And it might be coming from one of these further out of the money strikes for some reason. It's just not trading or whatever the reason is. So that'll give you a good indication. I think that 2-to-1 is a good idea. And if you're way off on either side, just try to verify the 4 legs to make sure, you know, that it's within reason on those options. But yeah, I use this as the guidance. If it seems fair in the options, you know, the options here are fairly quoted, fairly tight. You know, some of those that they're a little bit wide, but not super wide. But yeah, some of your wider ones, the bid-ask spread will be wide, and therefore I think your credit might be skewed a little bit. And if it is, and if it's a trade that it's still within the parameters of what we discussed, I would probably just start at a higher credit versus the 540. So if my spreads are a little bit wider, maybe I'll say, okay, well, let's see if I can get $6, you know, and then if I want to work it down a little bit, I can, just to be careful not to breach that 2 to 1, you know, too much. So then I get myself in a bad spot.
Yeah, I was told as a kind of a rule of thumb when you're looking at the difference between the bid ask, if it's like $100 stock or less, you would move the decimal point 3 places to the left. So like a $100 stock would be a 10-cent spread between the bid ask. And if it was like a $300 stock, you still move it 3 places to the left, it'd be like, you could expect a 30-cent spread and not to pay any more than that. It should be 30 cents.
Right. Yeah, and that seems fair. And we use that screener, you know, within the liquid options list that Josh set up. We have that screener tool that we use for the bid-ask spread, and that's a great one that we have, so that you could use also. I think sounds fairly similar because we're just using the spread difference, so the difference between the bid-ask spread divided by the stock price. So if the difference between the bid-ask spread is you know 50 cents divided by the stock price, that gives you the percentage, and that's what we're using here on this custom. I'll show everybody real quick on this custom screener. So we have option filters and you have option spread here. So you can do it really tight. You know, if you wanted to say 0 to 50 cents, then out of that liquid options list, I think there's 400 and something in there. If I hit find stocks, this tighter bid-ask spread might show me 40 or maybe even 30 stocks. I'm not sure how many, but that's just a guess. And that's what that spread's doing. So that's only showing me maybe 20 out of the 400. Yeah, and you can see the spread here. We show you the percentage there of the spread of the bid-ask.
Yeah.
Yeah, and that's a good way to look at it. You know, because again, we've talked about it before. Those bid-ask spreads are huge, and the fact especially when you're trading for a legged option spread, but even just when you're buying a call or buying a put, if the spread is too wide and you get in and you pay too much for it, you know, the stock can move up, you know, 3 or 4%, and then your bid-ask spread could be so wide that you're still at, you know, a loss or maybe even a break even when you try to get out. And that's the worst scenario. That's the worst scenario to be in, is to be like, you know, you see Netflix has gone up and you're like, okay, great, I've made some money, let me get out my option. And then you go in there and the thing is pretty much priced at what you paid it for. And you're like, well, that really sucks, you know? So you just have to be careful, because, you know, I've done that in commodities and it definitely transfers over here to stocks as well. Most of these stocks it's not going to happen in, but again, if you have an option that's just not traded as much, that bid-ask spread could be a little bit wider than expected. So, you know, definitely always pay attention to that.
Yeah, that looks like that brought up a pretty nice list of stocks.
Yeah. I mean, you're talking about Clorox, you know, Peloton and Tesla. I mean, those are pretty big companies, and I guess their bid-ask spreads are getting wider because people are trading those options more so. But yeah, you're looking at like Boeing, you know, Amazon, Apple, you know, Google. So Clorox, yeah, you got some pretty decent companies there. So.
Yeah. Cool. All right. Thank you.
But yeah, no worries. Yeah, and this tool is great. I mean, this is a great tool. This screener, any of these, I think, are really good tools to use to find, you know, just different information about some of those positions. So again, we've had a bunch of, you know, we have a bunch of stocks coming up within the, you know, within the earnings plan for the bullish pre-runners. Those still seem to be working really well. I think there was a bunch that came out recently for, you know, the banking industry, which we have the banks coming out with earnings right now. And, you know, that's one of the big ones as well, I think, regarding the president-elect and possibly interest rates going up throughout the year. So the banks kind of have possibly seen some benefits from that. But, you know, that being said, you know, make sure we're using this tool, you know, as a source to some of these trades that you want to put on. I downloaded it and I've kind of added these into my own little bullish pre-runner section here. So I have some stocks that you can see some of the ones that were coming out today. There's a couple more. We've talked about it before. Just If you have some other tools that you want to scan these different stocks for, definitely do so. Some of these that I have highlighted in yellow, we were on a call with Josh and some other people in the Delphian group the other day, and we were talking about grade. So looking at the Delphian grade of stocks. And so what I did was, so in the stocks and in our custom screener, I took a list of stocks that were having earnings coming out this week, and then I matched it up to see which of those stocks have a current grade A, meaning fundamentally their grade is the highest grade that they could get within the Delphian platform. And when I did that, so it's under fundamentals and it's grade. So when I did that for this grading system, these three stocks so MasterCard, ANTM, and then Microsoft. So out of this group of stocks, those three were the only three that had a grade A above 90 on that particular, or maybe a grade A above 80, excuse me, in that group. So I was like, well, let me highlight those and see how these work. So, that being said, last week we talked about using state modeling and maybe using the RSI and the Bollinger Bands or the standard deviation. This week I wanted to look at to say, okay, well, what if I use the grading system? And we haven't done enough testing to give validity to, the expertise or to use it wholeheartedly. But again, I think anything that you can use to help yourself kind of screen some of these out and make your own judgments a little bit more narrow on some of these lists that we have that might be a little too big to trade all of them. I think it might, it might behoove you to check it out and just see what you come up with. So that's what I did with these, just to look at them and see. So, again, you can do your list however you want to do it based on the list that Josh and I have sent out. Bob sent me an update today of something that he's done. That's not what I was looking for. Excuse me one second. So Bob sent a list of some of the stocks. So Bob Toombs is one of our members from the Dallas area, and he sent this over. So Bob's taking our list, the list that Josh had sent out for your bullish pre-runners, and if the stock has a 100% win rate based on that back test that we've ran for the bullish pre-runners, Bob's going to take the trade. So you can see here he's taken, some, I think 1, 2, 3, 4. This list of maybe 16 or 17, 18 stocks. So you can see he's still currently in 3 of them that are the 3 that actually are the losers, and the other he's exited those trades for a profit. So currently up $2,100. This 31.31% is the loss currently on just those 3 averaged out, not the entirety of the list, because those are the only 3 that are still open, I believe. But you can see the profit is what it is. And again, I mean, a lot of these stocks have been hitting off pretty well, I feel like, for these bullish pre-runners. Now, again, the market's going up after the first of the year. We've had a pretty nice rally in the market. So you would assume that some bullish positions would be, profiting from that particular type of move. But nonetheless, we've seen this happen the quarter before and the quarter before as well. And it seems like the market movement as a whole doesn't affect it to a huge extent on some of these bullish pre-runners. So he sent this list out and he didn't mind us sharing it, but this was Bob. So, thank Bob for providing this for us. So again, all the bullish pre-runners, he's following them for 100% win rate, and he's live trading them. So he'll give us some good updates on those as well. I still have some work to do on my virtual portfolio. So like I mentioned, I've missed some of them based on the earnings coming out. So what I'm going to try to do is get that updated. And if I can get it updated, I'll get the group email from Josh and send out kind of an overall update to everybody so you can see it hopefully by the end of the week. But I'll keep it posted on that one. So I've went through a lot. We're trying to keep these meetings down to a little bit more condensed area of time frame. So I went a little bit fast, but does anybody have any questions or comments on anything that I've talked about? We went over this a lot, so I completely understand that a lot of people get it. But again, I think with these vol crush trades coming about, I think we have some really great opportunities to make some great profits over a short period of time frame because those trading windows are so small. But again, we got a bunch of risk potentially coming on over the next week. So you got to be a little prudent as well. So questions, comments?
I have a observation that might be useful for the group. As you know, I trade the earnings plan quite extensively, but I don't take any of the trades that have estimated earnings dates.
Right.
That's just my personal choice. If it's
Wow.
not confirmed, I don't take the trade.
No.
And I've been noticing that when those stocks confirm their trading date, earnings date, sorry, it is more often than not, it's moving in. In other words, let's say the estimated trading date was January 31st. And then when the earnings plan shows that it confirmed, more than 50% of the time, it's moving into like January 25th. Do you follow what I'm saying?
Yes, yeah, and I agree. I've
So-
noticed that too. It seems like it's moving forward. Yeah.
It's moving forward. So what happens is, let's say the earnings was on January 31st. The plan said to get in, I don't know, 3 weeks before, and so you're getting in on the 10th. If the actual earnings moves in a week, that means you should have got in a week prior,
Correct.
right? Which is
Yeah.
a date that usually has passed. In other words, the original trade entry date was probably too late.
Right.
Okay, the original trade entry date recommended when the earnings were unconfirmed, by the time they was probably too late in the calendar, because the way it confirms what's happening, I think, is the CFOs generally give to the market the worst case scenario. And that's what I would do when I was in corporate, right? Oh, we'll have earnings out by January 31st, knowing full well that the company will probably get it done a week earlier, right?
Right.
But you wanna under promise and over deliver, right? And so
Sure.
what's generally happening is those earnings dates are confirming further in than their estimate. So just be careful with taking trades with an estimated earnings date. That trade entry date may already be too late based on the historical backtest.
Right. That's correct. And like we've seen too with some of Josh's, some of the raw data, you know, when we're looking at that raw data on these earnings trades, that could be a substantial difference between the win percentage and obviously profit factor at that point as well. So yeah, no, I agree. And I noticed that too just recently, where it seems like more often they're coming in, they're adjusting it to be sooner than later. So
Right. I've seen a few move out, but I would say 80% are coming in sooner than the estimate, which
Right.
would move
Yes,
your trade entry date to a date that's already past the calendar.
right. And
Hey,
here's
can I ask you a
one
question,
good.
Sadir? Sadir, since you've been like observing that, how close to the earnings date or the estimated date have you noticed the changes taking place?
Usually within a week. So
Within a week.
they're coming in 4 or 5 days, you know, something like that. And, you know, I think it's just human nature. I think what's happening, like I said, is the CFOs are telling the market, I don't know who they tell, to some service, I guess they tell the stock exchanges, you know, that here's when we're going to announce earnings. And if I was that guy or gal, I would probably put it a little bit farther than when I thought my team could get it done, to give me some cushion, right? And then, okay, the team gets the earnings and a report and everything done a little bit earlier, then they move it in, right? And that's what I see. Go ahead.
My impression was when listening to some of the TEA guys that talk every day, and I think that at least TEA goes out and scans. Maybe they get it from a service. That could be, because that might be easier for them to do that. But the services, I think, that provide that information go out and just pull the individual companies, financial web, part of their web page to see when the investors, they post it there. So when it's posted there, they probably don't change it. And it's probably, as soon as they post it there, then it's not estimated, my guess is. So my question to you was, in trying to figure out, well, do they all of a sudden change the date and it's like 2 days away, or do they change the date and it's still like the next week? So they give a little bit of time. Which have you noticed? Which of those?
It's coming in. It's consistently coming in, 5 days sooner than the estimate.
Yeah.
4 or 5 days. And what that does is move the trade entry. Remember, some of these trade entry dates are recommended 20 days before the earnings, 20 trading
Yeah, I
days
know.
before there, right?
Mhm.
So what that does when you move it 5 days in, earlier, it moves the trade entry date 5 days earlier, which then when you look at the confirmed earnings, it has moved the entry date to a calendar date that's already in the past.
Yeah, that changes the implied volatility of the previously subjected date and the now confirmed date to be probably quite different.
That's my point. Is it now the original trade entry date, based on the way Delphian has done the back test, which was on confirmed entry dates, the original entry date may be too late. You follow what I'm saying?
Yeah, I follow what you're saying, but if they move it up, that's going to move the implied volatility up from what it used to be, right? It will move in, it will move up for that period of time. That'll be the day where the implied volatility maxes out, is the new moved forward earnings call date. And if you're in the trade already and the implied volatility moves up, that's what you want to have happen, right? It happens in less time. I'm not sure that's a bad thing though. That's what I'm saying.
I don't know. I'd have to think about it. I'm just saying that there's a level of uncertainty there that's not in the back test, right?
Yeah.
Right.
True.
Yeah.
Dave, I'm seeing that too. I'm seeing a lot of these earnings dates being moved up significantly. I think some of them are coming up a lot more than 5 days. And so, yeah, I've got my entry date, and if it's passed, I'll drop it. But yeah, I'm seeing significant moves up too, which are alarming. So I've missed a couple good trades, I know.
Yeah. So my personal style, which is working for me, people have other ways of doing it that works for you, great, is if it's not confirmed, if it's estimated, I pass on the trade. And, that's just my personal choice.
Absolutely.
But certainly other people are taking those trades, and I'm hearing on the call that some of them are working out quite well, which is great.
Yeah.
Fantastic.
I've done what some of you have done. I've created the list and put it in, because I have TOS, and put it a list in a watch list in TOS. And I'm scanning it every day, looking for confirmed dates and changing the dates on my, my spreadsheet, and looking to see if it's still, I can still get in or not.
Yeah.
Yeah, that's. I mean, yeah, like we mentioned, if you can find a flow that works good for you, then great, and please share it, because I still do the same. I'm trying to find a good flow for these dates that are changing and things like that. And hopefully, 3 quarters from now, we won't be talking about the earnings dates changing as much, but that seems like it's here to stay for a little bit now. But to Sudhir's point, to the other points as well, you can see with Apple, if Apple's original entry was 15 days before earnings, you're talking about a 90% win rate, $98 profit factor. But if you shoot that a week, or let's say you shoot that 7 trading days ahead of time, now you're looking at 8 days before, and we're talking about a 60% win rate. So, and then only a 1.5 profit factor. So a huge difference between the two based on those date changes. So, Apple is just one example of the group, but still you can kind of see the difference between those dates as Josh had tested them. So.
Yeah, that's exactly what I'm saying. So just be aware that, the win percentage and stuff that you think is there may not be there when you're using estimated dates. But if it's working,
if the date's not accurate,
yeah,
right? Yeah, and I agree.
That's
good. And I agree the same thing. I've seen them about 5 to 7 trading days seems to be, and they're bringing them in, so they're bringing them closer. And on my list too, I have a bunch that I have that just missed, or they weren't confirmed, or that they were one thing and then they changed it and then they traded past. So not much you can do about that. I think we still have a really substantial list that you can use on those confirms. But yeah, like Sudhir mentioned, if you're trading the estimated ones, be careful, because if those dates change, it could change it dramatically. I don't know how the implied volatility, like Dave's mentioning, will help the options. We'd have to look at that and see, but you know, the statement seems fair. I would just have to kind of look at the numbers to see how that would impact it. And maybe that day that it changes, you could get a decent spike up in the implied volatility, get out of the option, but then it's almost like you'd have to see it happen the day that it's confirmed. So then you would have to get out of the trade on that day, maybe to capture that volatility. I'm not sure, just thinking out loud.
Yeah, that's exactly what I'm saying. There's so many trades in the earnings plan that I figure I just don't need to chase the unconfirmed one, the estimated one. You know, there's always there's other trades to do. So, and by the way, I have not taken a loss yet, and I have not but I haven't taken a loss. I don't think it'll last, but I haven't taken a loss yet. But I only traded the ones that are confirmed earnings dates.
Are you taking a certain percentage above the 80? Are you using above the 80% like we have with the list? So as long as like that's what.
No,
that's
I've taken every trade that was on the earnings plan that had a confirmed.
On the plan, yeah.
Yeah, and
Gotcha.
but now I don't watch them manually. I know. I think Bob was saying he watched it manually. I do it exactly like the presentation. I mean, I set the target at 25%. I set the stop. There's no stop loss on long calls, but on vol rise, there's a 50% stop loss. I set it exactly right at the beginning of the trade.
As it is, right.
Yeah, and then I just let them hit one way or the other, right?
Right.
And of course, I set a calendar reminder because you know they're supposed to be exited the day before earnings, regardless of where you're at. So I do them exactly like the presentation. But I don't take anything that is has estimated earnings date.
Gotcha. Yeah, perfect. Yeah. Yeah, and that's how it is. And I feel too, some of the bullish pre-runners have ran more, right? So I get out 25% and it runs more, but you know, I'm happy with the 25%. And I do the exact same thing, you know, with my live trading as I get into the trade, I immediately put the 25% exit and get till canceled. And then I just track it with the date to make sure I'm out, you know, prior to the earnings date. And many of them are. I mean, I can't remember one that has went all the way to earnings except, you know, with that virtual portfolio one. But other than that, I mean, they seem to be functioning pretty well. So good. Yeah. Thanks, Sudhir. Any other comments, questions, ideas? Cool. Well, if not, I mean, let's we'll kind of convene the meeting. But again, as always, you know, I mean, if you know, anybody has any questions or